Dan Deming of KKM Financial joins us now for the Trader Rundown. And Dan, will traders once again key in on interest rates? The move in Treasury
Absolutely
has been really phenomenal.
It has been very incredible, honestly. I mean, the momentum in this market, when the momentum shifts, Angie, boy, I tell you, we've seen it to the upside. And now, for the first time, the market's going to have to deal with some downside momentum.
We have been warning people, though. I know traders have been talking about this. You all have really come on the show and felt this too far, too fast brace for impact.
I think that there's enough going on in the economy and enough going on with the change in the tax code and the things that's ultimately driving this market and economy. I mean, the interest rate foundation has been shifted dramatically, and that's why the market is having to deal with this change in the foundation. So it's a little bit off balance right now, and that's what we saw last week. Anything in that 3% range, and that's probably a game changer for this market, and that could provide further pressure because you got interest rates competing with valuations in the market. And at some point, as we saw last week, there's valuations in the market that are going to be called into question.
Here's an interesting thought. There are a lot of boomers out there who've made a lot of money on the stock market, but they're getting closer to retirement, and they're starting to think, I better move that money somewhere else. Do you think there's some of that going on too?
Well, I think there's definitely some reallocations. The problem is, Angie, last week we saw all asset classes outside of volatility, which went straight up, all asset classes kind of moving together, and we haven't experienced that in quite some time.
Hey Dan, thanks so much for being on the show today.
All right, thanks for having me.